What is going on, everyone? Welcome back to another video, another day, another dollar with your boy. And we're breaking down our ES future contract. Per usual, we're going to be looking at our 30-minute time frames. Then we'll look at the bigger picture, break down the monthly, weekly, and daily time frames on both ES and SPY. Today, SPY went ex-dividend. So things are kind of starting to line up with SPY and ES. There's still a little bit of disconnect between price and what's actually happening in the profile and in their weekly, daily, and monthly charts. Well, mostly the daily chart, but for the most part, things are starting to line up a little bit. And I think the more that we remain within this area of consolidation, within this balance, the more that ES and SPY will remain in a, not remain, but will become more connected. You know what I mean? How price gets disconnected after ex-dividend, for those of you that know. For those of you that don't, you're slowly experiencing that choppy price action whenever that happens. Not a whole lot today. Pretty much did what we expected for the most part. We opened below 52.1575, that 11 wide point of control from yesterday. We took out the previous day's low. So I said if we got below it or opened below it and couldn't get above 15.75 or 22, we would most likely take out the day's low, get the low day there at 180, and then get the afternoon pullback low. And so far we've tested, or at least gotten near, our balance low. So once again, balance rules coming into effect. For those of you that don't remember or know what balance rules are, there are 3 balance rules. We've been talking about it all week this week. Hopefully they are drilled inside of your head. Balance rules. Whenever a market is in an area or a period of consolidation, there are 3 rules that you need to make sure you're abiding by. First one is getting near a balance low or high and rejecting, basically. So you get near a balance low or high and you reject and reverse the other direction. In this case up here, we got near our balance high, 52.57, and we rejected, rolled over. Now we're testing the other end of that balance. So come next week, if we stayed or hold above 51.57, guess what? First balance rule stays intact, and we'll be most likely rotating back up to the other end of the range. At some point, one of these sides is going to have to give. Now, the second rule is getting to a balance low or a balance high and slightly stretching it. So that would mean getting up here to 52.5725 and taking it out by maybe 2 to 3 points and then coming back in. Basically felling above that price. Or same thing on the downside, getting below 51.57, taking it out by 2 or 3 points, and then kind of felling on the downside and coming back into the range, just slightly stretching that balance. On the other hand, the last balance rule is basically breaking out, right? When we break out of a period of consolidation. Whenever we do decide to break out of this period of consolidation here, we should get good directional move in one way or the other, right? Whether it be up here to the upside, 52.57, you take it out and you push 2 through and away from it, right? Same thing on the downside. We push below 51.57 and we get some type of trend, whether that be one time framing down or with single prints, or just one time framing down, getting that grind and drift lower or drift higher. So those are the 3 rules that come into effect whenever you are in a period of balance, right? And keep in mind that our balance is Monday's low and then last Friday's high, okay? Monday's low, last Friday's high is our balance area. So we will remain within that area until we take out one or the other, all right? So not a lot to discuss today. I mean, it was rather choppy price action. We had quad witching, ex-dividend for SPY. I only took 1 trade today for myself, and that was pretty much fading the extreme down here. I got long 68.50 pretty much at the low. Like I'm actually pretty impressed with how I seen it. And I got entered at 68.50 a 5 lot, and then re-entered again at 68.50 a 5 lot, and then exited at 72.50. I was just initially looking for us to come back up to just to where the single prints were filling, because we attempted to go trend down, right? And we failed to go trend up here to go and get that 11 wide point of control. So we drifted lower, We attempted to go trend down. We opened, couldn't take out the previous days or previous time frames low. So I was just looking for us to rotate back in to fill that set of single prints. I really wanted to hold it up until pretty much 80, right? I wanted to see if we could get back up to 80 initially. That's what I wanted to do in the trade, but I wasn't quite sure what the market wanted to do. So I was happy taking profits whenever it did come back up. But clearly that trade, had I held it, would have reaped more of a reward, right? I was happy to get in basically at the low and get out for just a couple points, right? I had a 10 lot on and then it just rotated higher and higher. And that would have been, I mean, a home run trade for me for the week. Overall, I did well on the week. But yeah, there were a few opportunities today, but far and few in between, honestly. There really wasn't many opportunities as there was a whole lot of chop and indecision as to which way this market really wanted to go. There was an opportunity for an afternoon rally high against the open. Whenever we did push up, you could have taken a short against the open right here at 86 to let this thing roll over and come back down towards the other end of the range, right? You take the short 86, you get above, slightly above the open, or use the low of day from the previous day. You get back into that range, you get out of that trade. Could have taken the short to come back in to that point of control, which at the time was around that 81 level. So you're getting short 86, you get out 81. That is your target. But there really wasn't many opportunities to take good risk reward trades. It was a very tight range. So just with that alone and the mixed market generated information, there really wasn't much to do. I mean, value has been drifting lower slowly. But something I did find interesting is how we pretty much create a wide point of control today in the same area that we had this wide point of control back on this day here. For those of you that remember, we had this wide point of control right here at 80.75. We basically created the same point of control at 81.25. So just basically a point above it in the same area. Same area that we bounced off here. We come back down and we build some price in that same area, price and volume within that same area. We go out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 wide right there at 81.25. I guess technically it would be 1, 2, 3, 4, 5, 6, 7, 8. Yeah, technically it would be 82.50 because that is the closest point to half back. So technically speaking, it would be 82.50. That would be our 11 wide point of control. Or actually, no, I'm lying. I am lying. Nope, it is 81.25. 11 wide point of control right there. So basically the same exact area, and we held within that range. But nonetheless stayed below the previous day's range and value. Never could get back up to that 11 wide point of control up there. So once again, just building wide points of control and holding near a balanced low. Another time near a balanced low, we're holding a wide point of control. Let's go ahead and mark these destinations, and then we'll briefly look at the larger time frames, as I do think we went out with a inside week. So next week we'll look for that to come out of that and monitor it for continuation. So whenever we have an inside day or an inside week, you do the same thing for both. You look for it to come out and monitor it for continuation on, or lack of, on either side. So, and I'll show you guys what that looks like whenever we look at the larger picture here in just a second. Oof. I'll look a little rough today because I went to the gym and I just got back from it, and I hit a pretty decent long run there. I hit about a 7-mile long run workout. So trying to prep for this marathon, and quite honestly, it is kicking my behind, if you know what I mean. Quite literally kicking my ass. We don't go out with an afternoon rally high. I'm not going to call 90 an afternoon rally high. Just really nothing there to lean against. You can say that there was an afternoon rally high if you would like, but for me, There is no afternoon rally high. We just go out with the day's high, the low, and an 11Y point of control right here. So very tight range. I mean, 51, 81, 25 to 52, 15, 75. Not much in between there. So we're just kind of going up. If we could possibly consolidate in between these 2 points of control at some point in time, if we don't come out one way or the other. But just interesting to see these wide points of control kind of be developed. Alrighty. So there you have it. There's our destinations for the day. So if come Monday we open below 51.81.25, look to take out today's low 51.67.75 and then our balance low 51.57. If we do that, you have nothing until 51.24.25. And then 51.12.25 where the gap starts. That gap gets filled down here at 50.57.50. On the upside, if we cannot take out today's low and we hold the balance low, you'll look to rotate up to 51.81. Above that, 52.01, you find acceptance above 52.01, you have a vacuum and a magnet to 52.15.75. Afternoon rally high 52.22 will not be much to lean against, potentially an area to get out of a couple contracts. And then the point of interest up here, 52.35.75, where we blew through this wide point of control up here, will be interesting to see if we do get back to that area, and maybe that comes a bit of a sticking point prior to taking out these daily highs here. 41.50, 46, and 46.75, multiple days in a row with this high right next to each other. So let's go ahead and look at the larger time frames real quick. We'll look at ES. Why not? Let's go ahead and look at ES. Let's see what we got going here. Don't mind me. I'm just gonna chug some protein real quick. Alrighty. So here we have it. Here is our monthly time frame. We've been one time framing up pretty healthy for the last several months. 1, 2, 3, 4 months in a row. You can call it 5, 4 months in a row for me. Getting good extension above each and every month. At some point, maybe this trend will come to an end. If we look back, we have, I'm trying to think. All right, I guess right here, 1, 2, 3, 4, 5, 6, 7, 8, 9 months in a row on the upside prior to coming back into a balance for the year of 2020, right? Because we came into a balance here. We broke out of that balance 1, 2, so we ran up for 9 months prior to coming back into balance. And if we look at previous years, let's see here, we were in a balance. We came out of that balance. Let's see. Balance, up, back to balance, held, and then up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 months here from 2016 to the year of 2017. So we can continue to one-time frame up for several months in a row, obviously. And if we do continue to do such, I mean, we've almost hit my 5260 target on the upside that I put back in January. But if we do continue to move like this for the next several months, I mean, we could easily get up to around the 5600 level with no problem if this market remains healthy, and we'll continue to one time frame up on the monthly, which is the biggest time frame. Now for our weekly, see, this is where things begin to look a little weird on in ES, because interesting. According to ES continuous contract, they continue to one time frame up on the weekly, but I think with SPY it is an inside week if I'm not mistaken. But ES, you can see here, looks to be one time framing up on the weekly. Been one time framing up for several weeks in a row, with a few exceptions of a couple pullbacks where we've kind of come back into a little bit of a balance and then continue to push on up. As far as our daily goes, Daily. See what? None. No, oh, okay. I'm looking at the wrong thing. All right, here we go. Daily. Sorry, I was like, why does it look like there's the wrong thing on here? All right, daily remains within a balance. We're going to continue to chop between 46.75 and 57. Okay, 52.46.75 and 51.57. We will continue to chop around in here until we decide to take out one or the other. Now, we'll see here in a second, SPY have already tested their 20-day moving average, okay? ES has yet to test their 20-day moving average. It is around 51.1821, so just below our balance low. The 50-day moving average continues to creep up to where that gap gets filled on the downside. So I've been thinking if we were to get a pullback, so far we've had from the highs, so far we've had a 1% pullback. If we were to have a 5% correction, which isn't terrible, if we were to have a 5% correction, look at where that leads us. A 5% correction leads us down to this gap fill at 49.98. And if we do, guess what's around that area? 50-day moving average. Okay, so first things first, that would require us to come out of balance to the downside. And that would require us to get below the 20-day moving average and continue to stay below the 20-day moving average, and require us to one time frame down until we get to that point. And then that would look like on the 30-minute time frame, that would look like days like trend down, where we hold single prints, one time framing down continuously, B shapes, things of that nature on the downside, which show signs of weakness, continuous value to drift lower, things of that nature. Now, in the other case, as far as bulls case, they want to hold here. They want to hold the balance low. They want to hold the 20-day moving average. If we were to pull out below that the balance low, hold the 20-day moving average, as that would be a great area to buy, and then rotate on up. However, we haven't had much of a pullback in quite some time. So it will be interesting to see, is this an area where we stall for a little bit, right? Come into some period of consolidation on both the weekly and then maybe the monthly time frame moving forward, because this month's range, if we look at it, this month's range is much smaller. This range is 183 points so far. We still got some time. Okay, we're only halfway through the month, so we still got time. But compared to the previous month, 248. The month prior to that, 237. The month before that, 287. So the range has gotten tighter. Okay, so maybe that is a sign of trend being slowed. Now this is all speculation, but maybe we'll put in some type of top up here prior to continuing to push up higher. Maybe we'll put in some type of top, come back into a bit of a balance on the monthly time frame. Okay, so this month's low so far is 50.63. The 50-day moving average is at 49.89. So that would mean holding in some type of consolidation above 51.18 for a couple days, couple weeks prior to the next month of April, and then taking out the 20-day moving average, taking out the monthly balance or the monthly low, and then coming back into a balance on the monthly. Like I said, all speculation. And then obviously that would mean we would fill this gap on the downside and get to the 50-day moving average. All right. I'm not looking for it. I'm not big bear here. I'm just pointing out something that could potentially line up if we were to get any type of acceleration to the downside. So far, we really haven't seen that. We've only been getting about, corrections of about 2% on the downside. So, I mean, even here, like I said, about a 2% correction on the downside, about a 2% correction on the downside. So far, we've only been getting about 2% to the downside. But if we were to get it any more than that, like a 5%, which is not uncommon, 50-day moving average would come into play. And same thing pretty much applies to SPY. and we'll work things in reverse here. Here is SPY on the daily. Here's SPY on the daily. Look at how we held both the balance low. Actually, we stretched the balance low. So this is an example, and I think that's mostly due to the dividend effect. But right here, you can see how we stretched the balance low. Balance low for SPY was 508.42. Today we got to a low of 508.12. So we stretched it by about 30 cents on the downside. 30 cents on the downside, we stretched it and it came back in. So that would be the second example of a balance rule in effect. So if we did just stretch it, all right, if we did just stretch it, and we would hold the 20-day moving average and rotate back up to the other side of the range and get 50 or 518.22. Now for the weekly, this is where things will look a little bit different than hold on, I need to save this so I can clear it. Daily. Give me 1 second. I just need to clear this drawing set real quick. There we go. So this is the weekly. This is where things look a little bit different for SPY. SPY is continuously one time frame up. They have not taken out a previous week's low. And then look at this, inside week. So for SPY, it is an inside week. All right, ES looks like it's one time framing up. SPY is an inside week. That does not mean that the weekly has gone back to balance. However, it does not mean that the weekly has stopped one time framing up. It just means we have gone from up to some type of balance. So we'll look to see if we take out this week's low, if we get any extension to the downside, and how much extension we get will determine the size of that balance. And there would be an inside week down potentially, or an inside week up potential. Okay, so if this is a hold of a balance low here, now keep in mind this is the balance area. If this is a hold of a balance low and we do rotate up, that will look like an inside week up scenario, and we'll monitor it for continuation or lack of. Same thing for the downside. If we come out and take out this week's low on the downside, look for continuation or lack of. And then lastly, the monthly looks no different than ES. We continue to push up higher, continue to one time frame up, but nonetheless, note the lack of range. $13.31 the month before, $26.33, $25.19, $23.24. So note the lack of range for this month. So if this is an area where we stall, just keep everything that I said in mind. All right, I'm not calling a market here. This is all speculation, but you heard it here first, folks. Okay, you heard it here first. With all that being said, ladies and gentlemen, if you did enjoy this video, I truly appreciate it if you hit that like button down below. Huge shout out to my mentor and trading group, Paul Asmar. He runs a great trading room, camelbacktrading.org. Go check that thing out. Join the room, $30 a month. Go help the man. He runs an excellent room. Could not thank the man more. And if you guys do enjoy the video, go check out his Paul Asmar on YouTube. With that being said, ladies and gentlemen, we'll catch you next week. See ya.